All right, let's dive right in. Welcome to This Explainer, where we take these massive, complex macroeconomic shifts and geopolitical reports and break them down into exactly what they mean for you. Look, the year 2026 is shaping up to be literally a watershed moment for India. We're looking at this historic convergence of global trade pivots, massive domestic subsidies, and a digital economy boom that is fundamentally rewiring the landscape. Today, we're not just going to stare at boring, high-level data. We're going to translate these sweeping geopolitical moves directly into actionable insights for your wallet, your career, and your next strategic move.
Here's our roadmap for today. First, the global trade pivot. Second, booming sectors and subsidies. Third, we'll dive into markets, stocks, and real estate. Fourth, the AI career premium. And finally, we'll wrap up with the top 5 actionable takeaways.
Kicking things off with Part 1, the global trade pivot, opening the floodgates. Over the last few months, India pulled off this rapid-fire, honestly historic pivot in trade diplomacy that is completely opening the floodgates for the economy. Think about January 2026, the India-EU Free Trade Agreement. People are calling it the mother of all deals for a reason. It literally hands Indian exporters access to a market of 2 billion people and roughly 25% of the global GDP. Then bam, right on its heels in February, the US tariff deal hits, dropping tariffs on Indian exports from 25% down to 18%, which massively eases months of friction for chemicals, footwear, and auto components. And by April, the New Zealand FTA brought full duty-free access and a committed $20 billion in investment. If you are in an export-oriented business, this rapid succession of deals is an absolute game changer. So what does all this trade diplomacy actually add up to? Try $1 trillion. Yeah, that is the jaw-dropping export target set for fiscal year 2027. And honestly, it's incredibly achievable. I mean, FY26 already hit nearly $714.73 billion. Export-oriented manufacturing is currently riding the absolute best policy tailwinds we've seen in over a decade. And this momentum cascades straight into national security. Get this, 7.85 Lakh Crore rupees. That's the massive new defense budget, representing a 15.3% jump. But hey, the real story here isn't just that top-line number. It's where the cash is actually flowing. Post-Operation Sindoor's big push for self-reliance means a massive 75% of procurement is now strictly reserved for domestic industry. In fact, indigenous defense production recently hit a record 1.54 lakh crore. Because of this, defense isn't just a government expense anymore. It's a long-term, structural growth sector for manufacturing, drones, and electronics. Moving on to Part 2, booming sectors and subsidies, where the money is actually flowing. Just look at the sheer scale of the PLI, the Production-Linked Incentive Scheme. We are talking about 2.9 lakh crore rupees injected across 20 different sectors. This initiative alone has already generated 14.39 lakh jobs and driven a staggering 20.41 lakh crore in cumulative production and sales. By offering a 4 to 18% incentive on incremental sales, the government is essentially paying companies to scale up fast, and it's deeply impacting electronics, pharma, and food processing. Let's map these growth signals directly to your opportunities, so you can see where you fit in. Take AI and tech. They're targeting $14 billion in GenAI revenue by 2030, meaning AI, SaaS, and MLOps are absolute goldmines right now. In semiconductors, India's backing massive projects through the India Semiconductor mission. The Tata 91,000 crore fab is aiming for 50,000 wafers a month, and Micron's Senon plant just started commercial production in February 2026. With 4 whole chip plants going live this year, the entire ecosystem around chip design and testing is a massive greenfield opportunity. Okay, Part 3, markets, stocks, and real estate, the ground game. Now, for the stock market, the whole context has shifted. In 2025, the Nifty 50 rose about 10%, which actually underperformed compared to some global emerging markets. But that means valuations have reset to much more comfortable levels. Brokerages project the Nifty to hit around 28,992 by the end of 2026, roughly a 12% upside. But listen, broad-based rallies are pretty unlikely right now. This year is all about an earnings-driven, highly selective recovery. Stock picking matters immensely. Investors have to target structural defensives like pharma and defense, or maybe mid-cap IT firms executing an AI pivot, all while being super cautious with oil-vulnerable sectors like auto and capital goods. And what's driving a huge chunk of that physical economy? This massive number, 12.2 lakh crore rupees. That's the infrastructure capex for the 2026-2027 budget. This capital is actively funding high-speed rail corridors, east-west freight corridors, and expanding national waterways. This is literally the bedrock that will facilitate the next major economic boom. But here is the twist, and you might not expect this. A massive 66% of new direct-to-consumer orders in FY26 came from Tier 2 and Tier 3 cities. The real estate and logistics gold rush, it's moving out of the big metros. The government is pouring 5,000 crore rupees per city economic region to transform them into regional hubs. Cities like Indore, Surat, and Kochi are seeing incredible momentum and are the absolute prime targets for warehousing, logistics, and early mover real estate investments right now. Which brings us to part 4, the AI career premium, the personal payoff. So here's the absolute most crucial question. How do you cash in on this boom? Trillion-dollar export targets are great and all, but what does that mean for your daily life? Let's pivot to some highly actionable personal career and freelancing strategies. Check this out. GenAI and large language model skills are commanding 30 to 60 lakhs per annum. AI and machine learning engineers, they're snagging a massive 30 to 50% salary bump over traditional devs. But here is the real shocker. You know that old trusty strategy of just job hopping for a 20% raise? Yeah, that is completely dead. That premium has collapsed to just 4.8%. The market only cares about competency now. Upskilling in your current role, specifically in things like AI, cloud architecture, or cybersecurity, is far more valuable than just hopping to a new company. And you have to consider the remote work arbitrage. A local developer earning 20 LPA here can easily transition into a US remote role earning $80,000 to $120,000 a year. That is literally a 2.75 to 4.2 times pay multiplier. Right now, 1 in 4 global freelancers is Indian. And if you have AI development skills, Indian freelancers on platforms like Upwork and TopTel are easily pulling in $5,000 to $15,000 a month. The global digital economy is entirely borderless for top-tier talent. And look, if you think you can just sit this AI wave out, the data heavily disagrees. 90% of Indian employees are already using generative AI tools at work. Adapting to AI is no longer optional. It's the baseline. Furthermore, overall employer hiring intent has spiked to 40% for FY27, and that's largely driven by global capability centers, those multinational hubs based in India that are hunting for precisely these hybrid AI-enabled skill sets. Finally, Part 5, Top 5 Actionable Takeaways, Your Blueprint. All right, get ready to screenshot this. Here are your top 5 takeaways rapid fire. Number 1, AI skills equal an instant 30 to 50% salary premium. Upskill yesterday. 2, export manufacturing is riding the best policy tailwinds in a decade, thanks to those EU, US, and New Zealand FTAs. 3, with 75% domestic reservation, the defense sector has a massive, multi-year structural runway. 4, follow the DDC data. Tier 2 and Tier 3 cities are the absolute best real estate and logistics play right now. And 5, with 4 fabs going live, the entire semiconductor ecosystem is a completely greenfield opportunity. The data here is incredibly clear. Those global trade deals, the domestic subsidies, the infrastructure push, and this unprecedented AI demand, they all cascade down into these very clear, actionable moves. The 2026 boom is happening right now, today. The map is laid out right in front of you. So the only question left to ask is, are you positioned to ride the wave, or are you just going to be left watching? Thanks so much for joining me on this explainer, and I can't wait to see how you capitalize on these massive shifts.